Moinuddin Malim, the Chief Executive Officer of Mashreq Al Islami. Many thanks indeed for joining us.
Thank you.
A big week for Islamic finance in Dubai, the International Islamic Finance Forum taking place in the town, the great and the good of the industry gathering. And certainly the public face of the conference is one of optimism. If we look at the high level of Islamic finance, Sukuk issuance, Islamic bond issuance, call it what you will, prospects for that increasing after what was a relatively slow year last year during the credit crunch. Tell me, what's behind that optimism within the industry, and is it well founded, or is it just people putting on a brave face?
Well, first of all, one cannot blame for the downturn that was there in the industry. It was the economic downturn that we faced in the entire region. So from that perspective, the sign of optimism are there, because there are issuers who are coming in and tapping into the market, whether Islamic or conventional. Diva from Dubai was the first one who went in for a conventional bond. Subsequently, the good news that we've seen in the last 3 weeks, one was the repayment of DMCC Sukuk.
That's Dubai
Multi-Commodity Center Sukuk, which was the first ever gold Sukuk they did 5 years back. That was fully repaid on maturity at time. And the other incidents were on May 13 when the Nakheel Sukuk, which was $980 million, was repaid on time at maturity. So those are the signs that investors should look at as far as the regaining the confidence is concerned. Now from that perspective, if you look at the region, yes, in the region, even in 2009, the Sukuk market did came back, but it was more in Saudi and Qatar and elsewhere. But as far as the local domestic markets is concerned, Nakheel is a good sign. Nakheel is doing other Sukuks to pay back a few of these contractors. So it's up to the GREs and sovereign sub-sovereign to see how they want to tap into this market again.
I'm reading in the newspaper just yesterday, I think it was, a unicorn in Bahrain and Standard Chartered winning what's called a $6 billion Sukuk bid to raise finance for organisations in the Gulf through the Sukuk market. So there are deals happening. What's the pipeline? What are going to be the types of institutions that are going to the market? They want to raise money and are thinking the way to do it is through an Islamic bond. Who's in the queue, would you say?
Well, if you look at the recent S&P or Moody's report, they're all sort of hinting that it should be the sovereign and sub-sovereign entities which should come back and tap into the market, whether they're Sukuks or bonds. From Unicorn or SCB perspective, they are working on few mandates. There are few mandates that we are trying to pitch for, and I'm sure a lot of other banks who are actively involved in Sukuk, whether from this region or elsewhere, are aggressively trying to convince the issuers to come back into the market. Because obviously the CDS rates have come down for Dubai and other markets.
CDS, that's the credit default swap, which is kind of a measure of risk. It's suggesting that we're not quite as risk averse, we're not quite as worried as we were 6 months ago.
That's correct.
Let's talk about the other side of the equation, and that's the type of people who are going to be buying these bonds. You guys sit in the middle, the likes of Mashreq Al Islami and the other investment banks and corporate banks. You've got the issuers at one side, either, I don't know, a power company or a sovereign wealth fund wants to raise money to invest, but you need a bunch of investors who are going to write the checks and buy into the bond. Who's going to be writing the checks, Moin, at the moment? Local investors or guys spread far and wide?
Whether it's a Sukuk or a bond, historically in the last 5 years in sort of in capital markets in the region, you've seen that the majority of the participants in Sukuk or bond have been banks. Roughly 70% of the banks are picking up any of these scripts. Now, as far as the distribution is concerned, if it's rated and it's a sovereign sub-sovereign, then it's well spread out. People from Far East, from Middle East and Europe are all participating into this sort of instrument, Sukuk or bonds. So I would guess that if the AD ratios of these banks, which is the asset to deposit ratios of these banks, are right and they're liquid, they will be encouraged to invest in these their own sovereign sub-sovereign instruments like bonds or Sukuks.
What type of interest rates are we talking about at the moment? I know it's a moving target, isn't it? And no two issuers are the same. They have different ratings and so on and so forth. But if we look at the kind of interest rates is the wrong word, profit rates, forgive me.
Well, coupon.
Freudian slip on my behalf. What type of profit rates or coupon are we talking about?
Diva was at 8.25, 8.30 interest rate. And then if you look at Darul Arkan, which was a Saudi issuer which issued early April, they were paying a profit rate of 10.5%. DIVA being sub-sovereign, and Darul Arkan being a blue chip real estate company out of Saudi, which is the biggest one. So that's a range that one has sort of looked at in this current market. And I would assume that anyone that comes today in next couple of months will have to pay something in between that range based on their credit risk.
About 8 to 10%.
About 8 to 10%.
Now, predominantly we've been talking so far, and the industry has tended to work in US dollars. It's an international market and it works in dollars. But one of the things that came out of the International Islamic Finance Forum this week was that perhaps we're going to see more in local currencies, so more sukuk offered in dirhams or Saudi riyals or whatever it may be. Now, this isn't unprecedented. We've seen them before, but it has mainly been a dollar market so far. Do you think that there's much mileage in this issue of dirham-denominated sukuks?
I think there's tremendous mileage in it, predominantly because one needs to establish the domestic capital markets to really give some depth and breadth to the market, and that is in comparison to, let's say, Malaysia, for example. Malaysia issues more sukuks or bond in their domestic currency than probably international, and from that perspective, they have the interest rate yield curve build up for their own sort of corporates or the sovereign sub-sovereign issuers. And from that perspective, Saudi has taken a lead in comparison to GCC by establishing Tadawul Index. Now in Tadawul Index, they've got 6 scripts, 6 sukuks which are listed. There's Saudi Hollandaise script, there's Sabiq script, there's Saudi Electricity script, and yes, that is all dependent upon the demand and supply. But having said that, if you look at the profile of the retail investor in UAE, for example, what alternative choices do they have? They don't have any other means to sort of invest and diversify their portfolio rather than putting their money in the fixed deposit or buying up real estate or equities. Whereas, as we all know, bonds or sukuk are natural hedge against equities. So that is the need of the hour for more and more issuers to come in and tap into the domestic market, and that's where the regulator needs to do more work in giving us the right regulatory framework and encourage the local issuers to tap the domestic market.
What would be the advantage for, I don't know, a steel company in Al Ain, for example, of issuing in dirhams as opposed to issuing in dollars? Could they conceivably get a slightly lower coupon, cheaper financing, for example? Would that be an incentive? I can't see that really.
Well, it's not a matter of incentive, it's a matter of diversification, because when you tap into international market, you're definitely looking for a widened distribution network. Now, having said that, if one is not rated and one does not want to go into rating, then probably domestic market can really price them well. And if you go to international market, then the pricing could be even higher. So while if you have a rating, then and you're looking for a mega sort of a script, obviously one would go into international. But having said that, there's no stoppage of having multi-currency issues as well. You can effectively do dirham as well as dollar sukuk. And if you look at in 2007, Jebel Ali Free Zone actually wanted to do a multi-currency structure. One was a sukuk based in dirhams, and other was a dollarized bond. And effectively, they at the end just tapped into sukuk market and raised 2 billion dollar equivalent dirhams in sukuks without tapping anything in the dollar market in bond.
A final quick word about this as a business. You're the chief executive of Mashreq Al Islami. You're competing with the big international houses, with sukuk departments, the HSBCs and Standard Chartered, as well as some of the local players. We mentioned Unicorn. It's becoming an increasingly crowded space, isn't it? If I want to raise money through a sukuk, I've got a number of people I can go to. What's the competitive edge that someone like a Mashreq Al Islami can offer in doing this? How do you stand out from the crowd wearing your chief executive's hat as someone who wants to grow a business, get more fee income and so on and so forth?
Well, one has to look at the basic inherent strength of any institution when a client is actually giving a mandate. We did get a mandate prior to the market going down. At that time, we were not known as Mashreq Al Islami, but Badr Al Islami. We got a mandate for Tamwil Sukuk, in which we brought in the way Islamic and Standard Chartered, and that was a most innovative structure. So from that perspective, today at Mashreq Al Islami, we have the capability to structure and also distribute. We have a presence in Qatar, in Kuwait, in Bahrain, and in Egypt. So we have the capability to distribute any domestic paper into this region where we have a presence. And that's where our competitive advantage is. Obviously, we cannot compete with the big boys effectively. So what we like to do is we like to work with them hand in hand. Wherever they have a strength, we can let them play their strength, but we also bring certain strength ourselves in terms of structuring, in terms of local market knowledge.